Hello, very good morning to all, and welcome back to today's Daily Dose of Market Insights. Very good morning. I'm Kelvin here, and today will be a rather pivotal day. Later, I'll explain to you all why. So, welcome back to today's Daily Dose of Market Insights. Today will be Thursday, the 30th of October 2025, ex-post FOMC, and as well as Trump's in-person meeting that is taking shape right now. Right. So, as usual, before we kickstart our daily dose, let's have a quick look at the disclaimer first. All right. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. Right. So before we kickstart our full suite of daily dose today as well, because of the key important events that is taking shape right now and has already happened yesterday, which is the FOMC meeting, as well as the earnings results of the three mega cap stocks, which is Meta Platforms, parent company of Facebook, Alphabet, parent company of Google, and as well as Microsoft, and how they actually impact the broad-based movement of the 12 major asset classes that we cover on a daily basis. All right, so let's start with the FOMC first. So FOMC yesterday is very interesting. So what we could see over here is that, let me share with you on my screen very quickly, FOMC. And how does this adjust the probability of the future interest rate policy stance by the Fed? Right, so the Fed within market expectation that has really been priced in, which I share with you guys yesterday, almost 100%, that the Fed cut by 25 basis point to bring the Fed funds rate down to 3.75% to 4%. So, but Miran and Shumik dissent. So Miran is formerly from the White House, which is being so-called pushed into the FOMC committee by US President Trump. He actually advocated for a 50 basis point cut. So that is more or less the stance that he's representing indirectly from the US White House. And Shumik, very interestingly, previously he called for a 25 basis point cut in the September meeting. This time around, he actually advocate for no change. All right. And also, what's interesting over here is that we know that since 2.5 years ago, roughly about 3 years ago, that the Fed has kickstarted a quantitative tightening program, not QE. Prior was QE, where they start to buy up long-dated bonds. So this time around, they do a QT 2.5 years ago, where they tend to smooth out or we call it reduce the liquidity in the financial system by once those bonds are due, they will not use the proceed to buy up new long-dated US Treasury bonds. So this time around, the balance sheet run out or the current QT quantitative tightening program will cease by the end of the 1st of December. So i.e. there will be higher chances of more liquidity that will be introduced into the market. All right, and what's interesting over here is that Powell said that the December cut is far from a foregone conclusion. That means he tried to actually tone down the expectation of the third Fed cut. So still recall that yesterday, prior to the FOMC meeting, when I shared with you the CME Fed Watch 2, there's almost 93% chance that market participants in the Fed funds futures are calling for a 90% odds of another cut by the Fed in the December meeting. That means totally 3 cuts in 2025 from September, yesterday, October, and the following one in December. All right, of a total, there will be a 125 basis point cut. So because of this rather dovish pricing by the Fed funds futures market, Fed Chair Powell, very interestingly, he tried to tone down this dovishness by saying that the December cut is not 100% certainty, the way he expressed it during the meeting. So that causes the stock indices to actually plummet on the intraday session, and the yields to spike, and the dollar to actually gain traction. But what happened after that? After the so-called the press conference, the US stock indices rallied. All right, it rallied. So let me share with you guys over here is that it actually rallied back up over here. All right, so at the end of the closing, okay, we start to see positive reversal on the US major stock indices. So the SPX initially was down by about negative 0.2%, but eventually it closed unchanged by this mini bullish reversal after the Fed chair ended his press conference. So that was about almost half an hour into the before the close of the US session at 3:30 a.m. Singapore time. And the top performer is the Nasdaq 100, all right, managed to inch up with a positive gain of 0.1%, 0.4%, pardon me, to breach into a fresh all-time high. And the Dow Jones Industrial Average, right, also managed. Okay, give me a minute. Sorry about that. Okay, let me go back. Let me push it up again. Okay, let me open up the Dow Jones. Okay, sometimes, you know, when we're doing this live, we call it webinar, things tends to get a bit laggy in terms of the internet connection. Okay, just bear with me. So the Dow Jones Industrial Average didn't actually did that bullish reversal that much as compared to the Nasdaq and the SPX, because primarily the recovery is being led by those mega cap technology stocks. Later I'll share with you guys what are they. So the Dow Jones was lagged by, was one of the underperformer among the four major US indices yesterday, down by negative 0.16%, 0.16, negative 0.16. And the worst hit was the Russell 2000, given the fact that the small cap is pretty much dependent on a lower interest rate environment, and with the US Fed chair dosing off the ultra dovish hope in the December FOMC meeting, that causes the Russell 2000 to underperform, given that most of the small cap company are more highly leveraged or highly have a higher gearing ratio as compared to companies in the SPX and the Nasdaq 100 and even the Dow Jones Industrial Average. So hence the Russell 2000 underperformed with a negative 0.87%. So if you look at the heat map of the S&P 500 yesterday, the biggest mover were the mega cap stocks, a couple of them. Google up 2.51%, Nvidia up 3%, and Amazon with a small gain of 0.46%. So what's interesting over here is that Nvidia continues to bask in this AI optimism limelight. So Nvidia yesterday, give me where is Nvidia share? Yeah, Nvidia. Okay, so Nvidia share price actually surged, right? It surged and become the first 5 trillion market cap company in the world. Okay, first time a public listed firm hit 5 trillion, and the pace of hitting this milestone is getting very fast. Previously, about what, less than 2 months ago, he hit the around 3 months back, in somewhere around in Q2 or roughly, yeah, between Q2, start of Q3, it hit the 4 trillion cap, right? 4 trillion cap, and now very quickly, even before Q4 ends, it hit the 5 trillion cap over here, because of prior to yesterday, the CEO actually made a public announcement. It is one of the so-called company roadshow in Washington, where they struck out, we call it mega deals with other technology firms like Palantir, Uber Technology, which I share with you guys. So the key story over here is, to cut the story short, the uptrend phase, short and medium term, still remain intact on the major US stock indices, despite the US Federal Reserve Fed chair press conference sounded less dovish, right? That's the key story over here. So now, how does it impact there was a lag. Sorry about that. Let me. test 1 2 3. Okay, sorry about that. Let me do I think there's an internet connection. Okay, hopefully it works now. Mic test 1 2 3. Test 1 2 3. Okay, good. I think the audio is fine now. Test. All right, good. So the audio is fine. So now let me share with you guys this particular screen. So this is the CME Fed Watch 2. Shouldn't be so we call it shouldn't be give me a minute. Let me make sure that okay. Yes. Yeah. So this particular website shouldn't be so unfamiliar with you guys because I've been using this to actually share with you guys what is the current pricing like in the expectation by the Fed Funds futures traders on future FOMC meeting outcome. So this particular website is with error. Why? Because it keeps showing the current target rate at 4% to 4.25%, the Fed funds rate, which is not true because the Fed has already cut yesterday. So it should be 3.75% to 4%. So I shouldn't be using, I do not want to use this website right now because until they rectify the error. So let me refresh again. So it's still not showing. This is a error number. So it's erosion, full of errors right now. So until they refresh it, so I'll use another alternative website by showing you the guys the Fed rate monitor tool. So this is from investing.com over here. All right. So over investing.com over here is that, okay, let me expand the screen. Okay, so this is the last meeting of the year, the 10th of December 2025. So right now, the Fed funds rate is at 3.75% to 4%. So the next one, if the Fed will cut by 25 basis points, it will be reduced to 3.5% to 3.75%. And the probability of it right now is showing 64%, which is still quite high, but this has been greatly reduced by a couple of days ago, which is at 92.4%. And right before Fed Chair Powell Fed Chair Powell press conference, it was at 8.24%, and now the latest one is at 64% over here. And because of this CME Fed Watch 2 is in error, I cannot show you the aggregate tab over here because it will be in error as well, where the Fed funds will be in the next year, 2026. All right, so what I could do is that I will do my other macro, we call it subscription over here by looking at this micro. So this is a subscription that I have my own. So let me share with you guys, where is it? Sorry, macro, come on. Markets, topics, yeah, central banks over here. Then I'll go to the Fed. Okay, then I'll show you the futures contract compiled by them. All right, it means micro compile it. Okay, so what I do over here is yeah, this one, the policy rate curve implied by the interest rate futures contract. Okay, so let me expand my screen. Okay, so that hope you guys could see. Let me make my screen bigger. Okay, good. So come on. Okay, so if you look at my screen over here, right, this is the futures contract strip. So the black line is the current rate, right? The current rate as implied by the Fed, okay, the current Fed funds rate implied by the interest rate futures contract, all right, over here. So right now, if you were to go all the way down, right, stretching into December 2026, all right, 2026. So the current rate based on the interest rate futures pricing as compiled by macro micro is at 3.01%, right? 3.01%. So just want to share with you the investing.com is showing that there is a high chance that 63% chance that the Fed will cut another 25 basis point in December last meeting. So that will bring down to 3.5% to 3.75%. So you use 3.5% minus off 3% over here. That means what is the interest rate futures contract is showing as compiled by the micro website is that there could be potentially 2 interest rate cut in 2026 of 25 basis point each. That's why it allows us to bring it down to 3% over here. Previously, when I share you in the CME Fed Watch 2, why I cannot show you the CME Fed Watch 2 now? Because there's error. So previously, before the Fed meeting yesterday, market participants in the interest rate futures contract as compiled by the CME Fed Watch 2 is showing 3 interest rate cut in 2026. So that has been reduced down to 2. So that explained to us why the dollar bounced yesterday. So what's interesting over here is that let me share you guys on the dollar index right now. So the dollar, okay, so this was the bounce in the dollar. Then thereafter, the dollar starts to pull back in today's Asia session. If you look at the US dollar index over here, it continues to be hovering right exactly at the intermediate resistance level of 99.3. So why this 99.3 is important? Because it's the upper boundary of this so-called impending symmetrical triangle range configuration that is in play, a medium-term time frame one, from the low of July 2025. So that is close to about 3 months, 3 months plus of sideways movement. Yesterday, the rally stopped right exactly at 99.3, upper boundary of this symmetrical triangle range configuration. And also price action managed to help right exactly on the intraday basis at the first support level, which we highlighted yesterday, 98.66, which is also the 20-day moving average. So it's the range configuration. So I do expect a bit of range configuration going forward in a couple of days, as there is still no clear signs of a trending environment yet for the US dollar index at this point in time. All right, so now back to the earnings. So I want to show you the earnings over here. So the earnings, what interesting over here is that all of them beat expectation. Microsoft 4.13 EPS, market is expecting 3.64. Alphabet 2.87, beat 2.33. But this one, Meta over here, this is by trading economy, it show 1.05. But this one is in error. I don't know why how they get 1.05. So if you look at other website over here is that this from CNBC, Meta shares, actually the earnings per share is at 7.25 adjusted. Right, so it's actually beat expectation instead. So I'm not sure why trading economics showing an error of 1.05. I was quite shocked as well. So the reason why Microsoft and Alphabet collapsed. So what you could see over here, Microsoft and Meta. So let me share with you guys on the post earnings. All right. So Alphabet managed to surge over here. Okay, they beat expectation. And also there was also their Google Cloud Unit growth also surged above expectation as well. So that causes the Alphabet share ex-post earnings announcement during the after hours is surged by 6.73%. All right, over here. Okay, 6.73%. And what's interesting over here is that Microsoft, right? So Microsoft over here is that their share price ex-post earnings, they actually fell 4%, 3.98%. Okay, right. So the reason why, because investors or traders don't like it because they kind of over here. And what they mentioned over here is that they are suffering from a computing capacity crunch despite massive spending on data centers. So despite a significant amount of spending on data centers, there is still a crunch in computer capacity based on this, we call it post earnings, we call it communication by the management to the public. So that causes the share price of Microsoft ex-post earnings release to plunge by 4%. And very similar for Meta as well. So Meta was down by 7%, 7.4% after the earnings announcement, despite the earnings beat. So the reason why Meta fell was because they actually spent higher than what market is expecting over here. So they say that, and also the way they convey the message during the earnings conference by the big boss himself, Mark Zuckerberg, he pledged that Meta platform will continue to spend more aggressively on artificial intelligence in the year ahead, rising fresh concern from investors who drove the stock down on worries that the company may not have an obvious return on the massive investment because of the high capex per revenue ratio, right? There's a big risk that they may not be able to recoup their investment, fixed investment, because all these are capital outlay over here. So that's causes the share price to actually plunge after earnings. All right. So, but the net impact over here is that we start to have a rather still positive gain on the Nasdaq 100 E-mini futures as we are speaking right now. So the E-mini futures rose 0.4%, and the E-mini futures on the S&P 500 rose also 0.38%. So about the same pace. So right now, let's have a quick look what is taking shape in Asia right now during the Trump Xi president meetup right now. Okay, as we are speaking. So very quickly, let me go through my page over here. So I think all eyes are glued on this. All right, so let me refresh. I'm not sure whether is there any new update yet on my screen. So this is live. We call it a block by Bloomberg. Right, so updated 12 minutes ago. So they are still in. Okay, they are still in the progress of a meeting. No outcome yet. So apparently, okay, let me see what is going on very quickly, you guys. Okay, Trump said there could be a trade deal as meeting with Xi kicks off, so they are still in the meeting. So latest pointer, Trump called Xi a tough negotiator and said there could be a deal. Xi meeting start by saying it's normal not to always see eye to eye, blah, 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 blah. Okay, so apparently they are still in a meetup. All right, the meeting hasn't been concluded yet. All right, at this point in time. All right, so let's now, of course, they're starting to share more. Okay, so now let's immediately jump straight into the intraday technical outlook on the broad-based cross-asset classes, starting with the FX market. But before that, let me take a sip of water first, and let me expand my screen due to my ongoing cough that is getting much better. All right, thankfully. All right, let me take a sip of water. Oops, I think the screen is gone. Okay, yep, the screen is back. Okay, let me take a sip of water. Great. Okay, so let us start with the FX market. Okay, starting with the euro dollar. Okay, euro dollar. Good. This is the euro dollar. Okay, euro dollar. I mentioned that the support level 16. Excuse me. 1680 slash 1580. So a bit of excess yesterday at 1580 before the bounce take shape in the Asia session. So our target access to 1580, 1680, 1680 slash 1680s one. Okay, made 116 figure level, not 1680. What I'm talking about. Okay, sorry, there's a depot error here. Shouldn't be 1680. Depot error. Pardon me. Okay, so 116 figure level, 115.80 instead. All right, typo error, this zone here. Okay, before it bounces. So right now there will be a upside trigger level at 116.45. Let me put it in writing. 1.1645. Okay, so this will be upside so like an upside trigger level 116.45 above 1.116.45, potentially seek out the next intermediate resistance level at 116.77 next. All right, so this will be the 50-day moving average as well. Only a bearish breakdown below 115.80 will potentially see a deeper fall to retest the medium-term pivotal support area at 115.40 slash 115.30. So that's for the euro dollar. Changes in the levels will be number one, I have tolerated the access for the pivotal support to 1580, given yesterday's minor bullish recovery or minor bullish reversal by shaping an hourly hammer candlestick right after Fed chair press conference, and slightly below 116 figure short-term pivotal support, and we have the upside trigger level at 116.45, which is corresponding very closely to the 20-day moving average. Once this 20-day moving bridge, we start to see a very steep intraday sell-off during the 2 a.m. mark Singapore time. This is where Fed chair press conference gets underway at that point up. So this will be my upside trigger level 116.45. to increase the odds of a recovery further towards 116.77. All right, so these are the two new key levels to look out for. So now with this, let us move on to the sterling pound. So the sterling pound, we have a neutrality stance yesterday. So it broke below the lower neutrality limit at 132.40 level. Okay, and hit the medium-term pivotal support area at 131.70. Then after yesterday's low, it will be 131.40 level over here. 131.40. So what's interesting is that the RSI starts to have a bullish divergence. All right. So with this bullish divergence, there could be sign of a minor recovery in today's session. So I'll be using this pivotal support area, which is my medium-term pivotal support at 131.70, 131.40, as defined by the daily chart, daily time frame. First resistance level to watch on the intraday basis is 132.50. A surpass of this level will be pretty much significant. That means it also surpassed the 200-day moving average, indicating that yesterday's push down is just a noise post FOMC press conference. So above it will give much more higher probability for the recovery to take shape in greater faith towards the next intermediate resistance level at 133.10 next. A bearish breakdown below 131.40 will invalidate this bullish reversal, bullish recovery view to see a start of a multi-week medium-term corrective decline sequence for the sterling dollar to hit the next near-term support in first step at 130.30 level, 129.70, which is a Fibo extension level of 1.236 and 1.382, and graphically the 1.2970 confluence with the congestion area over here at 11th of April. All right, so that's for the sterling dollar, the key levels to look out for. Flipping to a bullish bias for today for a slight minor recovery in first step towards 132.50, using 131.70, 131.40 as the medium-term pivotal support area, supported by a bullish divergence on the hourly RSI. Okay, next up will be the Asia Pacific currency, starting with the Aussie dollar. So the Aussie dollar bounced out as expected. So it bounced from our pivotal support level, which highlighted yesterday, a tightened one. So we tightened the pivotal support level yesterday to 65.60, pardon me, 65.60. So still no change given that this is indeed a pivotal support, the way it bounced off a minor V-shaped recovery. So maintain that bullish bias on the Aussie dollar, still using that 65.60 as my pivotal support for today. First resistance level to watch will be 66.20, 66.30, almost tested yesterday. Only a burst up above 66.30 may see further upside towards the next intermediate resistance at 66.55, which is the minor congestion area of 15th of September and 18th of September. Okay, a bearish breakdown below 65.60 will invalidate these views to see the continuation of a minor corrective decline sequence unfolding further to expose the next support area at 65.30, 65.15, which is the 20-day moving average very closely, and the gap up that was being formed on this Monday. All right, so still maintaining that bullish bias on the Aussie dollar using the all-important 65.60 short-term pivotal support level for today. Next up will be the dollar yen. So still recall that dollar yen, yesterday we do mention that do keep a chance of a bounce. So the bounce actually indeed takes shape. So right now the bounce is now fast approaching the pivotal resistance level at 153.20 over here. So this should be a BOJ announcement. So let's see what's interesting. Anything about BOJ interest rate announcement? It should be no change. All right, so let me very quickly go to the website, investing.live, see what's the statement like. Okay, usually this website. Okay, let's see, did they mention? All right, so BOJ have, okay, so this is a summary of what they say. So as expected, 7:2. So yeah, same, no change. So these two guys, Takada and Tamura. So in the previous meeting, they also descended in favor of a hike. So no change in terms of the voting pattern. So still held at 0.5%. Forecast was steady, growth modest, BOJ signal patient amid trade and global uncertainty. So this shouldn't be a big picture. Okay. Okay, so the latest BOJ keep core CPI forecast unchanged. Okay, so no change in their CPI forecast at 2.7% for fiscal year 2025. All right, 1.8 for 26 and going back to 2 for 2027. well, real growth is seen at 0.7. So it's a respectively a largely steady outlook. So almost no change from the outlook that was previously released in July. All right. So blah, blah, blah. In the quarterly report, which is the latest out, BOJ said underlying inflation will likely stagnant in near term amidst lower growth, but should gradually firm up to levels consistent with the 2% target through fiscal year 2026. So this shouldn't be the same as well. No big changes, blah blah blah. But however, it judged that economic risk as skewed to the downside. All right, so this is downside. That means it's slow down in economic growth. So that's why that actually explained the initial that the spike up that we are seeing right now in the dollar yen over here. So still no change. So right now is that because it hasn't broken above this 15320 short-term pivotal resistance level. So I still got to watch this level very closely. Unless we have an hourly close above 15320, then we could see a spike up towards 15365/90, followed by the major resistance of 15450. So, and given the fact that other major dollar pair is still showing that dollar on resistance rather than dollar breaking resistance, I don't want to be so bullish to anticipate a bullish breakout in 15320. So I still maintain that bearish bias using 15320 as my short-term pivotal resistance level to play within this range over here. So to increase the view of my bearish bias view for today on the dollar yen, it got to break down this first support level at 15235, which is today's intraday Asia session low, where it attempt to break but can't break and now force a bounce right now as you are seeing right now. So this is very important. Also, yesterday's minor swing low, yesterday's minor swing high that is being formed in the European session, broken out, turns into a pullback support in today's Asia session right after the release of the BOJ quarterly outlook report and BOJ outcome, right? Interest rate monetary policy outcome, where it managed to survive at 15235, making it a very important psychological level on the intraday basis. 15235. All right, over here. So this will be my downside trigger level for today. So a breakdown below 15235 will increase the odds of my conviction for that bearish bias to throw it down to the bottom of the medium-term range, short-term range support level that has been in place since 22nd of October and 29th October. Survived these two occasions at 15150, which is also the rising 20-day moving average. So it's more So what we could see over here is no change as price action continues to trade in a rather tight range on a candlestick basis. Okay, let me remove this candle. All right. So pivotal support will be still remains the same yesterday at 26,240 over here, 26,240 over here. So next resistance level to watch will be at 26,935. All right, as it continues to trade above the 20-day moving average. And what could influence this price movement will be the outcome of the C-Trump meeting that is still in progress right now in South Korea. So unless we start to see a breakdown below 26,240, then we will kickstart another round of choppy minor corrective decline to retest 26,030 in first step, which is constitute with the rising 50-day moving average. Failure to hold above 26,030 may expose 25,855 next. So still maintain that bullish bias using the same pivotal support level at 26,240, given that price action didn't actually move that much so far as we are speaking right now, and so confluence with the 20-day moving average. All right. Now, up next will be the Nikkei 225. So the Japan 225 continues to burst in a bullish limelight over here, and now already broke above the previous minor swing high area over here. Okay, almost coming to a hourly close right now, a hourly bullish hammer candlestick, hourly bullish Marubozu candlestick above 51,330. So given that you almost have an hourly coming close to this hourly, coming almost to an hourly close, so there's about what 20 around what 50, yeah, close to about 20 more minutes to go, roughly. Yeah, 20 more minutes to go before the hourly candle close over here. So with that, I will actually tighten my pivotal support level to the low of the US session yesterday during the situation where Fed chair reduce the dovish expectation priced in by the Fed funds futures traders. Okay, so this is the bullish hammer candlestick exposed and shape that bullish reversal. So indicating also a positive sentiment outcome at the end of Fed Chair Powell speech yesterday. So this for sure will be a key pivotal support level for today, 50,755. All right, over here. Let me drag it up. 50,755. 755. Okay, so far the Nikkei 225 is moving within our expectations since the start of this week. All right, hitting our intermediate resistance level and bouncing off from those revised short-term pivotal support level that we have so far since the start of this week. All right, 50,755. So this will be the next support level already, a normal support level. Look out for. Okay, let me tidy up everything. Okay, so now pivotal support level will be tightened to 50,755, which I explained to you earlier why, and so now confluence with the lower limit of this minor ascending channel, a steeper one drawn from the low of 10th of October 2025. So as long as 50,075, okay, sorry, not 775, typo error. Okay, let's make sure everything is good. Okay, 50,000. Okay, 50,755. All right, 50,755. Tighten short-term pivotal support holds, maintain that bullish bias on the Japan 225, representing a Nikkei 225. Intermediate resistance level 51,900/950, a breakout above it take us up higher towards 52,775, 52,830, which is towards the upper limit of this minor ascending channel, a steepened one, and also a FIBO extension cluster level. Only a bearish breakdown below 50,755 will negate the bullish tone to see a further slide, a further dip to retest 50,090. So once hitting below 50,090, which is my previously pivotal support level, I'll be looking out for a bullish reversal candlestick again around this level to flip my bias back to the boost. All right, over here, given that the medium-term uptrend and the short-term uptrend still remains intact as you continue to trade above the 20 and the 50-day moving average. So that's for the Japan 225. All right, next up will be the Germany 30. So the Germany 30 has a daily close back above the 21,155 level, which is my short-term pivotal support level. Bouncing up ex-post Fed chair press conference. So still no change. Level still remains the same at 24,155 over here. So given that it did have an hourly close below it with a bullish hammer candlestick reversal pattern as well, supporting yesterday's recovery after the challenge of the pivotal support level. So I've got to remain this level at 24,150, which is indeed a pivotal support level, given that there's no hourly close below it. And in fact, it formed a bullish reversal candle with a close slightly above 24,150 yesterday, ex-post Fed chair press conference. So using 24,150, pardon me about tongue twisting, using 24,150 as my pivotal support level for the Germany 30, still maintain that bullish bias, but it's more like being a short-term range scenario right now. Upper limit of the range will be at 24,370 for today. Only a breakout above 24,370 will potentially gain more traction to see the bulls getting more encouraged to pierce higher in first step towards 24,480 over here. All right, so if you to do a descending trend line, okay, linking here, okay, linking here, okay, you're able to see that it's at 24,370. Yeah, so this is how I derive. Is this the upper limit of the range where it got rejected since 15th of October, rejected again on 22nd of October, rejected again on the 27th of October, and rejected again on this Tuesday, 28th of October, hereby giving it a very important upside trigger level. Only a bearish breakdown hourly close below 24,150 will invalidate or negate today's bullish bias to see it floating downwards towards retesting 23,995 again, which is very close to the 50-day moving average. So that's for the Germany 30. Next up will be the major US stock indices. The US Wall Street 30 bounced off nicely right exactly at our pivotal, not right exactly our first support level at 47,570, slightly above our pivotal resistance, slightly above our pivotal support level, pardon me, at 47,400. So still no change, still using 47,400 as my short-term pivotal support level, maintain that ongoing bullish bias in the US Wall Street 30, representing a Dow Jones Industrial Average. First resistance level to watch will be 47,890, 47,960 over here. Above it, seek out 48,190, 48,240. Only a bearish breakdown below 47,400 will invalidate today's bullish reversal / recovery scenario, expose FOMC to actually see a deeper minor corrective decline to expose the next near-term support level at 47,086, maximum 46,760, which correspond to the rising 20-day moving average. So that's for the Dow Jones Industrial Average. Next up will be the SPX 500. So the SPX 500 also bounced off right exactly at our first intermediate support level that we highlighted yesterday, 6,877, slightly above our pivotal support level, 6,850. So it hasn't broken above the 6,940 level yet over here, which is my resistance level that we highlighted yesterday. So unless we have an hourly breakout above 6,940 thereafter during the US session, then I will tighten my pivotal support level to 6,866. So for now, still using 6,850. Maintain that bullish bias on the SPX as it potentially head up towards the next resistance level at 7,000 / 7,015. So only a bearish breakdown below 6,850 right now will invalidate the bullish bias scenario for the SPX 500 to kickstart a minor corrective decline sequence, a deeper one to expose the next support level at 6,810, maximum 6,770. So 6,810 is also the gap up that's being formed on this Monday. So that's for the SPX. Lastly will be the Nasdaq 100 over here. So the Nasdaq 100 managed to bounce as expected from our first support level at 25,955. So now it's actually testing our first resistance level at 26,250, 26,340. So unless we have a clear hourly close above 26,340, then I will tighten my pivotal support to 25,995. So still maintain the pivotal support at 25,800 just in case of any whipsaw, given the high stakes meeting between Trump and Xi has yet to get concluded yet. So still maintain that bullish bias on the Nasdaq 100. Only a sudden bearish breakdown below 25,800 will invalidate today's bullish bias view to see a deeper minor corrective slide to expose the next two near-term support level at 25,620, 25,440, which is the gap up that's been left on Monday, and also the minor ascending channel support level drawn from the low of 17th of October, which is confluenced very closely at 25,440. So that's for the Nasdaq 100. All right, so that's sum up all the intraday technical outlook on the major stock indices. So let us now proceed with the commodities market, starting with the gold XAU / USD. So gold XAU / USD continues to be bearish. So still recall that yesterday we are looking for a bounce, but this bounce shouldn't be so significant. So it should be not so pronounced because there is no bullish divergence. Yesterday we highlighted lower low in price action, lower low in RSI, which I did during yesterday's daily dose. All right, before then it bounced as expected. Where it bounced, it rejected exactly off our intermediate resistance level at 4,015, below the 20-day moving average, which is the pivotal resistance that is very important for the bears to be in force. So given that price action going to drift downwards, it hasn't broke below 3,864 yet. So I don't want to tighten my pivotal support level to 4,015, still maintain it at 4,020. Unless we have an hourly close below 3,864, then I will tighten it to 4,015. So for now, level still remains the same. Maintain that bearish bias as it continues to undergo this potential multi-week corrective decline scenario that it may start to take shape going forward because of key support level is being taken out. Next support level to watch after 3,864 will be in first step on the intraday basis, 3,800, 3,780, which confluence with the one-time Fibo extension and the 50-day moving average. All right, over here, one-time Fibo extension is from the ongoing minor corrective decline sequence. And if we were to, from the high of 17th of October, And if we were to do a parallel descending channel, okay, it's way more below over here. Okay, let me pull it in. Right. Okay. The lower boundary of the descending channel is at 3,680 right now, which is confluence with the 1.236 Fibo extension next. And if you graphically, it should show this congestion area here of 16th of September previously, and 18th of September previous minor swing high, now turns into a minor pullback support level. Okay, so still maintain that bearish bias on gold, XAU/USD. I repeat, unless we have an hourly close below 3,864, then I will tighten my pivotal resistance from 4,062 to 4,015. Next support level to watch on the intraday basis, 3,800, 3,780. Unless we have a sudden bullish reversal and a breakout above 4,062, that will invalidate the bearish bias to see a squeeze up towards the important upside trigger level at 4,155. Only a breakout above 4,155. Why is important? Because 4,155 psychologically is important because previously where it managed to survive at the 20-day moving average, it only bounces up to 4,155. So in order to see a more significant recovery, it got to surpass above 4,155 to create a more significant positive feedback loop to surge upwards towards 4,203. Then thereafter a retest of the current all-time high at 4,380. Lastly will be the West Texas crude oil over here. So the West Texas crude oil continues to shape that bearish reaction of the 50-day moving average, right? Of the 50-day moving average over here, all right, over here. Okay, so we have been bearish ever since that overextended rally that takes shape on last 1.5 weeks ago. So given that price action can't break below the 60-10 level, I don't want to be so aggressive to tighten the pivotal resistance to 61.80 level over here. So I'll still maintain it at 63 figure level unless we have a clear breakdown with hourly close below 60.10. Then I will tighten it to 61.80. So still maintain that bearish bias on the West Texas oil as it continues to retrace this swift rally that has taken shape from 20th of October to 24th of October, which is last Friday. Pivotal resistance 63 figure level for now. Breakdown below 60.10, tighten it to 61.80. Next support level to watch 59.15. A breakdown below it exposes 57.90 in the first step. So that's for West Texas oil, still maintaining that bearish bias. All right, so that sum up all the intraday technical outlook on all the 12 broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today, and events to look out for other than the Trump C meeting that is still taking shape. So with that, there is a couple of interesting European data to take note of over here. So for Germany at 5 p.m. Singapore time, we have the flash Q3 GDP growth rate that will be out. Market expecting on an annualized basis year-on-year to improve to 0.3% year-on-year from 0.2% in Q2. So that could influence the euro dollar and the euro crosses and the Germany 30 CFD index over here. And also going forward, we have the aggregated one, the Eurozone one, out later at 6 p.m. Singapore time. All right, so then we go all the way down. We have 9 p.m. Singapore time. You have the Germany preliminary inflation data that will be out. So market participants will be focusing on the harmonized inflation rate year-on-year preliminary one. So harmonized means core inflation, excluding those volatile items like oil and like energy and food. So for the month of October, for Germany, market is expecting a slight dip to 2.3% year-on-year from 2.4% previously printed in the month of September. So that will be at 9 p.m. Singapore time. So that could also influence the euro dollar, the euro crosses, and the Germany 30. And most importantly, will be the ECB interest rate decision right after 15 minutes later at 9:15 p.m. So that will be the highlight of today. Another central bank meeting, ECB, but ECB market expecting no cut at 2.15%, and market participants will be more focusing on the press conference at 9:45 p.m. to hear hints from ECB President Lagarde whether ECB will continue to hold firm to state that it's already ended its interest rate cut cycle, and the next step will be much more how they want to monitor the key interest rate going, the key economic indicator going forward over here. All right, so let me remove this. So that will be the ECB press conference at 9:45 p.m. So if ECB Lagarde continue to sound that ECB is pretty much confident that there will be no deflation risk in Eurozone, economic continues to stabilize, that could more or less cement a end of the interest rate cut cycle that took shape last year and could potentially find some support for the euro dollar going forward, right, which I share with the levels to look at. So that will be at 9:45 p.m. Singapore time. So no weekly initial jobless claim for the US, given that of this ongoing continued government shutdown that's coming to the 4th week already. Okay, so that potentially, yeah. And also before the start of our daily dose tomorrow at 7:30 a.m. Singapore time, we have Tokyo core CPI data that's up. So Tokyo area CPI data is considered as a leading inflation trend for the nationwide Japan CPI data. So that will be closely scrutinized by market participants. So market participants will look at the core rate and as well as the core rate, which is excluding food and energy. So for the core CPI, market participants expecting a slight uptick to 2.6% from 2.5%. So if both the core rate and the core rate continues to push up higher, above the 2.5% that was printed in the month of October, that could actually see the dollar yen inching down much lower. Then thereafter, we have at 7:50 p.m. we have retail sales from Japan and industrial production for Japan for the month of September. So that could also influence the dollar yen, the yen crosses, and the Nikkei 225 or the Japan 225. And thereafter, 9:30 a.m. Singapore time, we have the MBS manufacturing PMI data that's come out from the Statistical Board of China, and the MBS non-manufacturing PMI data for China, that will be the services PMI. So market is expecting almost unchanged from previous month print of 49.8. That's in September, 49.6, a slight dip, 50 for market expecting for non-manufacturing with the services, similar with the 50 level mark that is being printed in September. So if this start to show further improvement, that could see the continuation of the bullish trend in the Hong Kong 33 / the Hang Seng Index. So that's for the key data to look out for in early tomorrow's Asia session, and as well as the events to look out for in today's session. All right, and before we go, we also have two more mega cap technology stock reporting their earnings after the close of today's US session. That means, i.e., right after 4 a.m. Singapore time today, 31st of October, right, on early Friday. So the market, the two stocks that were reporting, the two mega cap stocks that were reporting after the close of today's US session at 4 a.m. Singapore time tomorrow, 31st of October, Apple and Amazon, right over here. So these two exposed share price reaction will have a significant influence on the Nasdaq 100, followed by the S&P 500 price section during the start of the Asia hours tomorrow. All right, so with that, I'm Kelvin here signing off. I wish you all a great day ahead, and we shall speak again tomorrow. Thank you very much.